India's market news headquarters. Cutting edge analysis. Influential insights. Market moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios Friday morning, and it's going to be wait and watch. Well, waiting and watching for the US jobs data that is later tonight. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. And the wait and watch for Mumbai's favorite festival has finally ended, because if you're wondering why we are in this attire, you know it. If you're here in Maharashtra, if you're here in Mumbai, and actually around the country as well, greetings, advanced greetings of Ganesh Chaturthi. And that's why we're in a bit of a festive fervor, cheer all around, plus it's a Friday, so good day.
It's a feel-good factor. The markets are a little subdued, but we'll take it as it comes. One of the most favorite festivals that we look forward to is here. So over the weekend, it's going to be visits to everyone's houses, taking blessings, and prosperity and happiness always.
Absolutely. I can tell you one thing, as a former Delhiite, this festival was always seen as a very Mumbai-centric, Maharashtra-centric festival, but that's really changed over the last 15 odd years. It's become a pan-India reason to celebrate, and of course, Lord Ganpati being welcomed in houses all across the country.
Absolutely. And, it's quite, those visuals, and you will see those visuals over the next many days if you're in Mumbai through the course, around the city essentially. So very, very happy time. Well, let's quickly run you through what you need to know as far as markets and global stuff is concerned. We'll start with, of course, the US jobs data tonight. I mean, that's essentially the one data point which is keeping everyone on tenterhooks. You've got a little bit of suspense, a little bit of trepidation, because the last big number which we got at the end of July really threw markets off. And that was a big surprise on the negative because it was a big miss. And that kind of triggered and sparked off the mini meltdown we saw in the first week of August. And that's why this is important. This is also important because you've got the September Fed meeting. And this is the big data point, the last big data point, which will determine how this one goes. Is it going to be 25 or perhaps it's going to be 50? I'll come back to this in just a bit. Now, stocks were largely in a holding pattern range. So S&P on your screen, the NASDAQ, some down, some up. But if you look at the overall S&P 500, 75% of shares on the S&P 500 were lower. 8 out of 11 sectors were in the red. Well, what did better, and it showed up in the NASDAQ as well, was Megatech. Megatech outperformed. And I think it could say thank you to Tesla. Tesla essentially said that it's going to introduce self-driving cars in Europe and China over the next couple of quarters. So I think markets took note. But otherwise, I mean, on the broader S&P index, it was more down, in an overwhelming kind of way. Now, you also had some labor market data last night, although all of this is going to get overwhelmed when we get the big jobs report. But you had the August employment data. And the initial jobless, so the private employment data, which is ADP, and the initial weekly jobless claims for the week ended 31st of August, both were kind of tepid. Actually, the ADP number was weaker. Initial weekly was largely in line with expectations. August payrolls later today is going to be the big focal point. I just want to say this. And I've said this before, you want something which is the ideal, the Goldilocks kind of number would be just a slight beat to what the expectation really is. So what is the expectation? Consensus is 165,000 job additions for the month of August, and an unemployment rate of 4.2%. So just a small beat to those numbers, I think, will do the trick. It'll basically signal to the market that the economy is doing fine. It's not really, weakening substantially. And it'll allow the Fed to actually go ahead and cut by 25 basis points. If it is wildly different on the upside or downside, then you have to sort of, reassess assumptions, etc. So, bulls would be happy with a 25 basis point cut and not a 50. 50 would mean that number essentially comes in much lower than that 165 consensus. All right. Well, not very much in terms of other indicators. The 10-year was at about 3.73, was down 3 basis points. Dollar index down about 0.25%. Oil was not really changed, 72.68. There were some OPEC headlines. You also will have a Fed official commenting post the jobs data. And I think that will really cement price action in terms of, that'll be the Fed's first take after the jobs number comes through and how they are looking at it. So that's another thing. Now, here in India, I think I said this yesterday morning as well, a bit of a holding pattern is what is to be expected. We got a flattish, slightly sideways market. We must try and hold the Wednesday's low, which is 25,083. We're not very far away from that, about 60 odd points. The next support comes in around the 20-day moving average, 24,785. And for the Nifty Bank, a break below 51,240 would signal a bit of a downward momentum here. And below that, some other supports will come up on your screens. So you've got 58.57, which is the 20-day, and then 49.778. On the upside, we know the levels to conquer and the sort of, targets to hit, but be mindful of supports as well as you go in. It's happened before that on big US data days, you get big rallies as well, and it's proven right. But I think this one is a bit tricky, especially after the July-August experience. So better to wait for this, and then you get a better, cleaner, more certain picture as we come back into next week. GIFT Nifty indicating about a 60-point lower start. Surabhi.
Absolutely. And Prashant, that's interesting because some of the Asian markets are actually managing a little bit of green. So let's see how that plays out. But just to talk about the data points, obviously the big one is this evening, which is the jobs report. Ahead of that, whatever little data we got yesterday from the US was actually not that bad. So for what it's worth, let's just put the numbers up on the board. So we had the initial jobless claims number, which was lower than the number reported last week, 2.27 versus 2.32. So small, decline coming through, which is a good thing. Then you had the August S&P Global Composite PMI number. That number was also better than expectations, 54.6 versus 54.1. Then we have the services sector data, the ISM services data. Remember, manufacturing was weak, but services was better. 51.5 versus estimates of 50.2. But obviously, these pale in comparison to the big number. That's the non-farm payrolls report that we'll get this evening. Now, as I was saying, Asian markets this morning, they've got a little bit of a green around them. The data point in focus in Japan is actually household spending, which is interesting because remember, earlier in the week, we got the inflation print from Japan, last week actually, and that was higher than anticipation. But the household spending number is actually quite weak. Spending is up only 0.1%. Expectations were at least a 1.2 sort of a number. So that's making people wonder whether the Bank of Japan will indeed stay on hold because it seems that households are, not very active when it comes to their spends. Anyway, to talk about the picture, by the way, Hong Kong's not trading yet. There's some typhoon over there, so not getting rates in Hong Kong. Keeping that in mind. Coming back to the oil markets, there's a lot of range-bound action on oil, but there is a bit of a bounce from the extreme lows that we had. The news has now more or less become official. Yesterday, the agencies put this out as well, that indeed OPEC Plus has now come together to sort of agree on a deal where they'll be pushing back any increase in production by at least 2 months. The anticipation was they'll supply 180,000 barrels per day additional to the market, but they're not going to do that, not for the next 2 months, and that's the reason why there's a bit of a support to oil prices. Back home, if we talk about the flows picture, then it's quite similar to what we've been seeing in the past as well. We've got domestic institutions which have been on the buy side, but that buy figure is a little lower than what we've seen in the recent past. Among other things, in terms of corporate action, watch out for the AGM for Godfrey Phillips because so much is going on with that family dispute. And yesterday, Ms. Beena Modi got a huge relief from the courts. She can indeed exercise the rights over that large chunk of shareholding. So let's see how this goes. It's going to be pretty action-packed from a news point of view. But I think we're starting off with cues which are not too bad, Nigel.
Well, that's right. And the Nifty bulls, they have been very, very smart and, they've been on the ball. And yesterday, it seems they have sensed that overnight there could have been something that's coming in there because all of a sudden, from around midday, you had the Nifty that actually ended closer to the low point of the day. It could be a weekly expiry-related factor as well, but they preempted something. And that's why if you look at the chart, you'll see that we ended closer to the low point of the day. But there are two global cues actually that are supporting us. Brent crude prices still have not bounced back, irrespective of the news flow. It's still holding at the lower end of the range, which is good news from an India perspective. And the dollar index as well, it pulled back close to around 0.3% or thereabouts. So a softer dollar and weaker Brent crude prices bodes well for an emerging market like India. We ended lower yesterday, but there was more of unwinding. On the Nifty Bank, we saw unwinding of open interest out there. And on the Nifty, the premium actually went up. So, so there are some counter long positions as well that got added. What about the FIs and the clients? The FIs, they continue to remain net long. But from the start of this week, from around 2.5 lakh contracts, that number has come down closer to around 2 lakh contracts. So they're unbundling some long positions. And as we always want, we want some, we don't want an overtly long FI sitting in there. Some shorts in the system are always good. The clients, they are the ones. And in percentage terms, that's the FI positioning. Close to around 68% of their positions are on the long side. The clients are the ones that got it right, and they were building in some short positions. But from the start of the week, from having around 1.5 lakh contracts on the short side, that's come down by 50,000 contracts, now around 90,000 contracts on the short side, which is telling you the clients as well are covering their short positions when the market dips a little bit, which is good news, which I'll view as a positive. And that's why I believe that this uptrend is well and truly on. Looking at the options data, 25,000 put, well, that was very active in yesterday's trading session, premium around 72 rupees. And 25,200 call, well, that as well was fairly active. Going by the options data and going by how the markets have been moving around in the past few sessions, I'll give you a couple of levels. Because the 25,000 put has seen a fair bit of writing, the important level that it needs to hold is around 24,950. Till this is holding, you're saying that that journey towards 25,500 plus, that's on, though resistance could come in at around 25,350. And I just, at the end, we'll just pull up the intraday chart of the Nifty IT index. But the Nifty Bank as well, has been taking support at around this 51,200 to around 51,250. A couple of sessions ago, it went down to this mark and bounced off from there. So that's an important reference point as well. But the IT index as well, even in yesterday's trading session, saw a big bounce up from the low point of the day. And that's the one that's been lending support. So I think if we get a 100-point downtake, the odds are that we bounce off those lows. So let's see how this goes.
Okay, let's see if the bulls can indeed prevail once again. Let's kick it off then with the equity call of the morning. Surendra Goyal of Citi says that FII inflows have been net negative in most cases in the immediate 1 month to 3 months following the commencement of a US rate cut cycle, but positive over 12 months in most cases. He says healthcare and staples did well over 12 months from the start of the previous rate cut cycles. He says they are making a few changes to their top picks by removing industrials and utilities from sector preferences and their stock lists. He's saying that they have added HUL to their India preferred list and adding Bharti Hexacom to their mid-cap picks.
All right, well, let's get you some money market views as well. This is Lakshmanan V of Federal Bank, who says that the dollar index saw some recovery after making a 13-month low due to lower U.S. jobless claims and stronger services PMI data. He says non-farm payrolls data is awaited for further guidance on FOMC. He adds rupees holding at record lows due to dollar demand from importers. For the coming sessions, he expects the USD INR to trade between a range of 83.8 to 84.15 to the dollar.
On bonds, Lakshmanan says Indian government bond yields were largely unchanged, with the benchmark yield glued near key 6.85% level in the absence of any major factors. He says that crude oil prices tumbled to a 9-month low near $72 a barrel amid demand concerns. He says market participants await the crucial U.S. non-farm payrolls data to firm up their interest rate cut bets. He says coming seasons could see the 10-year benchmark bond yield trade in a range of 6.8 to 6.9%.
All right, we've got a lot of stock-specific action track for you. We get to that in just a bit. For the time being, we run you through the list. We're looking at Mrs. Bector's Food, Camlin Fine, Matchmoney.com, NLC, GMDC, Ashoka Buildcon, KEC. All of them will be reacting to positive news flow. While on the flip side, we have Indigo Paints, Bharat Forge, and Angel One, which will be reacting to negative news flow. Well, time to slip into a short break. On the other side, we'll connect with Rajiv Agarwal of Doordarshan India, who will be joining in to help us out with a global setup. Stay with us.